This is a very interesting topic. We covered it a little bit yesterday, but I wanted to bring together an expert panel for you this morning to go into a little bit more detail about how this is impacting financial and social lives. So we have Geoffrey Kendrick from Standard Chartered, who's the global head of digital asset research. We have Gasper from Wintermute, which is a leading market maker in both crypto and equities, and Fahim from Optimism, which is a layer 2 blockchain built on top of Ethereum. And so we have a mixture of technological expertise and financial expertise. So Geoffrey, you've got a rich history in financial services. So could you kind of start with laying out essentially how it works at the moment with centralization, ledgers, and trust, so we can then go on to what Ethereum changes.
Thanks, Matt, and thanks everyone for joining this morning. I think a couple of key words that the Baroness mentioned earlier, inclusion and trust, I think is what I'll try and draw out from what blockchain can do today. So essentially, to Matt's direct question, how do traditional financial markets sit compared to where blockchain is potentially taking financial markets? So traditional financial markets, as we all know, been around for a few hundred years now. Essentially what you need is a trusted central authority. Yeah? So I have a personal bank account with Barclays Bank. I do transactions. Barclays adds them up each month. Hopefully there's less outgoings than there are incomings each month, but who knows these days, right? So Barclays will then add all of my transactions up and plug them into the Bank of England. Yeah? So 99 days out of 100, that system's worked extremely well, right? Obviously in 2008, we had some troubles around that, but mostly it works very, very well. And it tends to work very well in developed markets like the UK or the US, yeah? Perhaps slightly less so in emerging markets, which I'll come to with some comments later on about stablecoins. But what you need is that central authority who is trusted, yeah? So trust is key. And trust is typically inbuilt in the traditional financial system. Now, very differently to that, instead of having a central authority in blockchain, you have no one stood in the middle. Yeah? So trust is inbuilt in the system. Yeah? So instead of having Barclays in my personal example now, you have a system of computers globally, so let's just say 100,000 computers globally, who agree on which transactions are valid and therefore avoid double spending problems that could otherwise come up. Yeah? So trust is inbuilt in the system, but we're trying to get to exactly the same place. Banks like Barclays and the Bank of England have added up my transactions and others for hundreds of years now, and blockchain does that in a very similar way, but without someone stood in the middle. And that's extremely handy in developing markets, and it's extremely handy to make things a lot quicker. Yeah? So it then starts to lead to financial inclusion and other very positive factors as well. I'll leave that there for now.
And I guess adding on to that, Gasper, Wintermute is kind of really grounded in the traditional systems and methodologies, but also experts in digital assets. How do you see, kind of the bridge between those two?
Yeah, I think, good morning everyone, by the way. I think we're at a very interesting point within the industry. We have had a decade and a half of building innovation. I think we're at an inflection point where the tech feels mature enough to support pockets of the existing financial system. How we operate as market makers and financial players within the industry is, it was mentioned this morning, we have a CeFi arm and a DeFi arm. So we have traditional financial markets, which we cater to, but increasingly we're also hosting financial markets on decentralized financial markets. And these are exclusively governed through the use of smart contracts, decentralized governance. So I think the point is, it was mentioned this morning as well, it feels like a digital revolution, and it might feel like this because there's a lot of jargon, there's a lot of new nomenclature coming alongside the introduction of this industry. But it feels to me like it's just a continuation of digitalization of financial markets, which continued in the 80s. Obviously, we've seen that extensively happening on centralized systems, and now blockchain is a new decentralized ledger which got introduced 15 years ago, which now feels mature enough to start hosting pockets of financial markets. So we're actively already working on it. It does what it does what it says on the tin in a very efficient fashion, and I feel like it's a very national transition. I think ultimately more and more pockets of centralized financial markets will, in some shape or form, be replaced by decentralized financial markets.
Brilliant, thank you. And I guess on a technology perspective, so it sounds like Ethereum blockchains are trying to, change the way that we interact with trust. But how do we scale that trust so that everyone can access it and make the most of it?
Yeah, good morning, everyone. Before I kind of jump into that, just a bit of a personal story. So I'm a global citizen and a self-proclaimed cowboy, obviously. From doing that, I have friends over in places like South America, all the way to South Asia. And a couple of examples. So in Venezuela, for example, where they're dealing with 1,691% inflation, digital assets act as a survival mechanism and a hedge for many of these people to ensure that their savings, the hard work that they do and the salary that they get is not eroded away by hyperinflation. The second example is one of friends in regimes, whereby those regimes can decide that the assets you have in your bank are no longer your assets. The very next day, you are no longer able to withdraw any money whatsoever, or any of your savings that you've worked so hard for. And I find that incredibly empowering and exciting that we now live in a world that essentially is encouraging financial inclusion through mechanisms like blockchain technology. And Ethereum was a starting point around 10-ish years ago now. But there is a long, long way to go. We are at 0.001% right now of what this innovation will realize and allow. Visa, for example, there is a mechanism for payments called transactions per second, the number of transactions that can be run on a network and can be handled efficiently and successfully that runs every single second. Right now, Visa handle around 65,000 TPS, transactions per second. On average, it's around 8,500. In terms of being able to handle that, as well as MasterCards and WorldPay and various other payment networks and various other types of digital transactions that occur, we need a lot more capacity and scale than we have right now. And I think a big focus that I've had is on building blockchain infrastructure and the importance placed on being able to scale these networks. The last thing that we want is for people to trust these networks and for their transactions to fail. It actually happens in kind of the crypto kind of cowboy land that sometimes I spend my weekends and my nights doing, whereby I try and carry out a transaction and I hit multiple failures, and then I realized that the transaction never occurred or never happened. So there are still failures that exist from a scale perspective, but essentially the trusted system, the settlement layer that occurs, still ensures that there is finality, that there is still kind of an end goal that occurs. But the system requires a lot of technology throughput, and it requires a lot of scale. It requires us to invest in the infrastructure and the foundation. An example I tend to give is one of highways and tolls. When highways were introduced in what started in the Industrial Revolution to even most recently in the 50s and 60s, especially here in the UK, it then led to a boost in innovation, commerce, trade, transportation, logistics. And we're kind of in that phase right now in blockchain infrastructure where we need to lay the plumbing and the groundwork in order for us to scale to the level that we actually need and to allow more people to come on chain and be part of this financial inclusive world that we're all aspiring to build.
Fantastic, thanks. Geoffrey, Fahim touched a bit there on financial inclusion and on wealth preservation, which can be enabled by blockchain. I know you've looked a lot at stablecoins, at how they could be adopted and what impact they might have on emerging markets. Maybe I'll just let you talk through that in its completion.
Yeah, thanks, Matt. So stablecoins, it's fair to say, are the first one-up, one-across move the blockchain has started to do, right? So I took a black taxi this morning from Paddington. I could have easily taken an Uber, right? So we all know that example. And stablecoins are essentially doing for taxis what Uber did for... stablecoins are essentially doing for cash what Uber did for taxis many years ago now, right? So where we are today is we've come to about $300 billion of outstanding stablecoins globally. We've had a rapid run-up in 2025. I'm predicting that we get to $2 trillion by the end of 2028. And the way we get there is today, when you dig into the detail, about 2/3 of stablecoins today are used for savings purposes in emerging markets. So, as just mentioned a moment ago, it's a way for individuals either to protect cash against high inflation in the likes of Argentina, or to protect cash altogether in locations where that money may be taken away, right? So today, money that would have in past cycles been buying property around here, that would have come out of some of these locations, has now gone into stablecoins because they're quite frankly the safest thing around. And given that the US administration has decided to have a narrow banking solution, if I put my economist hat on, which means that they're 100% backed by treasury bills, which is very different to how banks have run for the last 100 years or so. So we're going back to a narrow banking solution. They're extremely safe, extremely liquid, extremely easy to use, and 24/7. So this technology so far, again, is roughly 2/3 used for savings use case. The other third is starting to become the disruption of TradFi that we've been used to. So this is traditional payments. So instead of sending money through payments rails that were built in the 80s, which quite seriously these days are massively outdated, right? So the useful analogy here, and it was mentioned before about how our children are digital natives. When I spoke about this at my son's school a few weeks ago, and he's 11, I gave the following example, which I think no one in the room at that age understood. So banking rails today are kind of like when we were all children and our parents had an encyclopedia. So how ridiculous is an encyclopedia in 2026? The internet has allowed all information from all of human history to be available in the 2 phones that I have over there in my pocket, in my jacket, right? For the last 25 years. Now, stablecoins are doing exactly that for cash today. So instead of waiting a few days to send money from here to Europe, or a couple of weeks to send money from here to Uzbekistan, to make up an example, money can go instantaneously, near free, costless transactions in dollars today, and tomorrow FX markets will also all go on chain. So we're starting to build into these much greater speed, low cost, low latency, i.e. these things happen immediately. So there's, all corporates can be much more capital efficient. If you can send money globally instantly, you don't need as much cash stockpile, right? So we're starting to get into that today. Initially, it's about saving and preserving cash in emerging markets. And then now, post-Genius Act from last year, it's becoming about this transactional point as well. And so it's going to now impact all of us in developed markets too.
Gasper, I mean, both traditional and digital asset markets are more than just stablecoins. What, in terms of RWAs, native crypto assets, and otherwise, is possible as we have this transition?
Stablecoins very much feel like the first step in terms of adoption. Ultimately, you need something, i.e. money, to settle transactions with. So stablecoins was always going to be the first use case that saw like broad-based adoption, and as mentioned before, we have 300 billion now today locked in stablecoins, mainly USD denominated, but this allows for settlement of transactions which are happening on chain. I think the next market which we are seeing a lot of traction in is commodities. We're seeing a lot of tokenized gold being traded, increasingly tokenized crude oil. So these markets have traditionally operated either physically or cash settled and are now moving into digital assets. I think a big component of all of this as well is we talk about digital assets, but ultimately what they unlock is the use of smart contracts, which is something we use daily in our settlement as well. Smart contracts is simply set through a very rule-based descriptive contract, which resides on the blockchain. Transactions can be settled instantaneously without the requirement of a middleman. So whatever, me and Matthew, we do a transaction. Within the rule of the smart contract, it is stated that if 1,000 sterling in stablecoins is deposited by Matthew within that contract, I can hand him over a specific amount of gold or whatever type of asset that also resides on the blockchain. This is not possible with fiat. So fiat's not trustless in the same way that stablecoins are, to the point where smart contracts cannot be used in the same way that digital assets allow smart contracts to be used. So that's what I also mentioned in financial markets, is traditional financial markets historically require a couple of centralized players, i.e. big banks, clearing houses, settlement brokers, in order to facilitate transactions within the system. Through the use of smart contracts, increasingly this is getting automated in a way where we, for example, with counterparties we face on a daily basis, don't need any settlement intermediary. Everything is done instantaneously. And I think that is a very big unlock. Obviously, stablecoins is the first step. We have that mechanism of exchange, and now we're moving into other asset classes. But yeah, I think it's virtually limitless. Like, people are tinkering around with real estate, commodities, intellectual property, I think, is very interesting as well. Data is another asset. So more and more assets are getting populated on chain as we have broad-based adoption.
And for him, it's not just financial assets, but decentralized applications, and indeed blockchains like layer 2s on top of Ethereum, whether it's Celo or otherwise. How can people use that technology not just for financial, or indeed for financial as well, but for applications and systems that help socially?
Yeah, for sure. So with blockchain technology overall, the main use case that many people have anchored themselves towards is around the financial use cases. We speak, very passionately about financial inclusion, providing savings accounts and microloans, and even pay for outcome type of experiments. There's a number of different things happening. We build open source technology to allow people to build this blockchain infrastructure, but it's not just limited towards these financial applications as well. There are a range of different emerging use cases. There's a reason why the children that were brought over to Parliament to talk about or to learn a little bit more about the work beyond Parliament, and had mentioned, they're incredibly interested in Web3, is because of all these other innovations. There are things around digital collectibles, which are very prevalent on things like Roblox and others. There are games that are being put essentially on-chain. And there are a lot of other emerging use cases. We have a number of different kind of layer 2 solutions, or essentially blockchains built on top of Ethereum. And the reason that they exist is because we're seeing teams like Sony Music Group, for example, build their own blockchain, because they're thinking about putting PlayStation and their IP under the PlayStation Group from Sony under their own blockchain. And the reason is because there are more use cases that now exist that they can essentially trade that IP or transfer that IP or allow people to buy into that IP in a way that they couldn't before. So I think it's just going to unlock a whole range of other use cases that we've not even thought about. Other areas are remittances, and so payments is one area. Being able to fund experiments. For example, Celo, which is what Matt had just mentioned, is a blockchain, a layer 2 blockchain, that essentially is a carbon negative and mobile first blockchain. So anyone can launch this chain or spin up this chain from their smartphone, or be able to interact with applications directly from their smartphone. And on top of that, you can fund climate action goods or climate action initiatives directly from this blockchain. So essentially, we're really trying to reduce the carbon negative impact that is occurring through things and mechanisms that, for example, Bitcoin runs on proof of work, which can be incredibly environmentally intensive. And so really trying to reduce this impact and make it more positive, externality focused as well.
And I've heard about micropayments, microfinance, probably since I was a teenager. Why has it failed previously, Gasper, and why could it potentially succeed with this new technology?
Yeah, so we spent also in a previous life, before being a trader, a lot of time looking at microfinance and not necessarily the failure, but the limitations of microfinancial institutions to have maximum outreach, i.e. to provide as many possible microloans to anyone who necessarily needs it. And we are at the point where I think technology is mature enough where it can be easily rolled out. And what it does is it completely compresses the overhead costs that are tied to providing microfinancial loans. Microfinancial loans historically have been very small amounts, especially in emerging markets. which are just startup capital for anyone to do anything, for anyone to venture into a specific business line. But historically, these have been offered by institutions which either sit in the West or are very centralized and have a very large overhead spending, not necessarily problem, but just generally a burden. For a loan to be issued, whether that's a $1 million loan or a $5,000 loan, this overhead cost remains exactly the same. For like example's sake, let's say it's $2,000. Let's say it's $2,000 for $1 million. It's also $2,000 for a $5,000 loan. If someone wants to start a barbershop, it needs $5,000, but the incremental overhead is already $2,000 of additional costs on top of that loan. The yield this person needs to repay in order to finance that loan becomes extremely ridiculous, pushing people into this loop where it virtually becomes impossible for them to repay this loan, getting them stuck into debt traps. There are some very interesting companies also built on Ethereum, which are now rolling out, especially in Latin America, because stablecoin adoption is very, very wide there. Brazil, Argentina, Chile, Venezuela as well, who are offering microfinancial loans at a fraction of the costs. You're looking at like a 99% compression of overhead costs, which then all of a sudden make the repayment of these loans very feasible. So yeah, there are some big companies already. They're doing close to $1 billion, I think, in terms of loans on microfinance institutions. Everything is settled on blockchain. It's very highly automated. So this just completely increases the outreach of microfinancial institutions. And yeah, I think that's a very exciting, it's a very exciting pocket for especially financial inclusion, I think, in emerging markets.
Yeah, I think financial inclusion is an interesting one. Like, if I want to invest in a private credit fund, private equity fund, that's probably not possible. I know there are things like that are now possible, but I'd also open it up to any other things on social impact that you think of, Geoff.
Yeah, I think financial inclusion is massive here. So one of the original ideas for Bitcoin was that we'd use it to transact with each other, but it's too slow and too expensive, right, is the reality. But stable coins, and some of the points here about how cost can reduce 99% on loans, etc., when stable coins are backing them, are massively important. So there's still 1.7 billion people unbanked in the world, according to the World Bank, and all you need to get access to a dollar-based bank account now is a phone that has access to the internet, right? And so the likes of Africa have already jumped that hurdle in the past decade or more. And so now, in theory, every human in the world has access to a financial system which is dollar-backed, which is backed by US treasuries. Yeah? And so they can save money, which is happening today, 2/3 of stablecoins. They can transact with each other in the same way M-Pesa was very, very successful in Kenya previously, right? But that can now be at a global scale. They can get access to finance for small projects, right? 99% cheaper than before. They can buy assets, any asset in the world, once tokenized, be it US equities, be it credit products, be it real estate, right? So for the first time, every person in the world will have the ability to do exactly what Elon Musk does today, right? He's got $500 billion worth of Tesla stock. He can go to JP Morgan and say, please lend me money against that. And tomorrow, everyone in the world can do that with all assets that they own on chain, because they'll be able to plug them into DeFi protocols that will lend against those assets, right? So this financial inclusion piece, not only from the bottom up, getting everyone involved, now unleashes the possibilities for all of us to do exactly the same with essentially no more risk than we've had in traditional banking rails for the past decades.
That's great, thank you. Today's also about AI. I don't want to suggest that blockchain is the answer to everything, but there are very interesting intersections between AI and blockchain, and I know Gasper's done an awful lot of research on that, so maybe just a high level on what that looks like.
Yeah, I could sit here a couple of hours and talk about it. It is very interesting how blockchain is becoming very synergistic with artificial intelligence, both obviously being very different emerging technologies being developed in isolation. And it's only a couple of years, let's say 2-3 years ago, that I think that intersection is vastly explored. And a lot of it makes sense if you look at the underlying asset with which they're dealing. Obviously, AI becomes extremely powerful when a lot of data is unleashed within those models. And blockchain is about being or safekeeping data. So the underlying asset with which they deal is data, both of them. DLT is about making data trustless, publicly available, or whatever you want to call it, and AI is squeezing useful utility out of data sets. So the intersection between both is becoming very interesting, because if you look at AI models today, they're being unleashed into the broader population. Obviously, November 22, OpenAI released GPT. All of a sudden falls into the hands of the masses, but there were no guardrails in place. And to make it very brief and concise, there's a very interesting field of study which believes that blockchain can be those guardrails around data sovereignty, data provenance. I think there's a big mystery still with the public around what goes in these models, what data is used within these models. This is all possible. The data provenance is possible to look at through the use of blockchain. So there's this intersection where AI is being put on top of blockchain systems. Obviously, this is very early days, because you're introducing two mature technologies which were initially never intended to coincide on top of each other. It's a very interesting field, but there's a lot of capital flowing to that space. There's a lot of funding. I think also the large, big players like Google, Amazon, all the hyperscalers are recognizing this potential and are increasingly funneling investments into that space, either through organic in-house like building these subsections, or inorganic acquisition. So I think it's a very interesting space to keep an eye on. It's probably like, whatever, it's always 5 years out. It's probably 5 years out. But yeah, it's definitely one to keep in mind. I think a lot of AI in a decade from now will be hosted on DLT or blockchain technology.
Brilliant, thank you. I think we're almost at time, so any final comments from the panel? Okay, brilliant. Well, thank you very much for your time.